What's up, guys, and welcome back to the channel. So on this video, I just want you guys to quickly see how I plan my week as a Forex multi-millionaire, or as someone who has been trading Forex with 10 years of experience. So how do I plan my week, and how can you do the same? Like I used to always tell you guys, there's nothing that happens in Forex trading accidental, all right? Success in Forex trading is not accidental. You need to plan for it. You need to be able to actually plan for those results you want to get. So without taking much time, let me just show you guys how I plan for my week, and most of the time it ends up being a very successful one, and it all starts at the level of planning. Proper preparation prevents poor performance. So how can we prepare better as Forex millionaires, or as someone who is aspiring to be a Forex millionaire? How can you better prepare for your week? So before we even go into that, let me just quickly show you guys this screenshot. It was so nice, and I can't do a separate video just showing you guys this. This is the power of what? Of bouncing back. This is the power of recovering from a setback, all right? Or from a setback in normal life, or a drawdown when it comes to trading. So since we're talking about trading, let's use the trading language. So in life, we can say, okay, how can you recover from a setback? But now in trading, how can you recover from a drawdown? So look at this 25K account. This is the highest one that I had a big drawdown last week. So I want to use this one as an example, right? Look at this 25K account right here, and just look at how we were able to get a drawdown. Look at how huge the drawdown was last week. Look, we had a drawdown right down to this area here, was almost about 23,300 or something. Almost. Just look at, if we scroll down a bit, you will be able to see the drawdown. We almost hit drawdown on this account. But look, we've already recovered until we've already made almost about, we are now on 26,000. We're standing on $26,400. So we've already made almost about 6% of the account. I mean, the same account which we almost lost the account last week. So now, how can you be able to recover from a drawdown like this? Whether you like it or not, as a Forex trader, you're going to have episodes like this where you're going to be in a huge drawdown. But what I've noticed is people will be in a huge drawdown and they'll get angry, like, well, what the heck is this? How can I be in this drawdown? When will I ever get out of this drawdown? Blah, blah, blah. And then they start doing nasty. They start taking nasty decisions, and boom, they lost their account. So how do you recover? Number one is having a plan. That's it. Number one is just having a plan. That's it. Once you already have a plan in place, you will be able to recover from any drawdown, because that drawdown is not going to force you to start acting out of what you have in your trading plan. If I have a trading plan, I don't care whatsoever my outcome is going to be. I don't care whatsoever my result is going to be. Main question I'm going to ask myself, am I sticking to that trading plan? If the answer is yes, bro, I wouldn't mind, because I know at the end of the day, I'm going to have an edge. At the end of the week, at the end of the month, I'm going to recover from that account. So point number one is you having a plan. Once you have a plan in place, you're going to be able to recover from any drawdown when it comes to Forex trading. Look at this. This was like, let me just go down and I'll show you guys the history on this account. You can see today was the 31st. All our trades will hit 9. This one hit us almost about even 2% per trade. So you can see we've gotten almost 100% the whole of today. I'm using a very small lot size, 0.5. All right, and I'm trading oligo on this account. I have different accounts, and some are trade oligo, some are trade gold USD, and then some are trade gold and Great Britain pound USD. So I just bet this one, I'm trading strictly gold on this one. Let me go down just to show you guys the history. You can see we already traded this account for 5 days, and we are just waiting for what? We're just waiting for profit target to hit. We are already up with almost 4.3%, and we are just waiting for the profit target to hit. And hopefully today's Monday, before the end of tomorrow, I'm foreseeing we're going to pass this challenge. So let's go down so you guys can just see the history on the importance of you guys sticking to your plan. This was on the 25th of March, where when I bought this small account, because I just wanted to test this particular strategy strictly on gold, right? I bought this account. The day ended with $1.27. 127 ended with $127. That's almost about 0.3% of my account. Woo! The following day was a very bad day. I was down with almost about 4% of my account. That was on the 26th. Then the following day again, I was down by almost about 0.01 or 0.02% of my account. You can see the lot. So I traded more, even more this day than this day. So The lot size are there, the number of trades are there, and then boom, the 28 came and we made almost the same amount we lost on the 26th. So we made $1,026. We opened a total of 7 trades. Lot size we used was this. So this was, I think, the highest lot size we've traded so far. And then 31st, which is today, this is Monday, and this is still 1 p.m. my time, meaning the day we still have a long way to go. We are already up with $1,500. $1,500 on a 25K profit account, it's almost about 6% of our account, 6% to be precise, and we are already up with 6% of our account in one day. So we've had, that's why if you can go right up here, you can see the wonderful recovery. We came from here, 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 and boom, we are almost here. So the line is almost here, and by tomorrow, boom, we're going to be funded on this account, and the next one is just going to be what? 5%. That 5%, we might hit that 5% in a day. Now we funded, we're just targeting 10% on that account, which is going to be $2,500. We withdraw our funds. Once I withdraw that $2,500, I can use it to buy 4 100K profit accounts, and the cycle just continues. You guys have already watched the video I made on the 50-10-50 rule. I'll just use the 50-10-50 rule, and I can start from this $25,000 account, and I go right up to $2 million, right up to $3 million. I did it in 2023. I went from $200,000 right up to $4 million, documented everything on this channel. You don't even need to go far to see that video. To see those videos, the videos are all on this particular channel. So I just wanted to point this out because many of you guys suffer from drawdown, and the question is always, how can I be able to recover from those drawdowns? So a video like this is going to help you a lot on how you can recover from any drawdown. So let's quickly go down on how I'm planning, on the plans I have for the week, because that is very, very important. So what are the plans we have for this week? For this week, if you can see my, if you can see my profiles, so they call this layout. If you can see my layout, I have different strategies here for different market conditions, all right? Gold is pushing down a little bit, but don't worry, I'm still very, very bullish on gold. Very, very bullish on gold. So we are still very, very bullish on gold. So what is happening here is, now when I start my new week, I ask myself, what strategy am I going to be mostly focusing on based on the market condition I'm seeing? What strategy am I going to be mostly focusing on? And what is the approach I'm going to use? So I plan every trade, and I trade that plan. So after knowing that, you can see here, I have different layouts for different strategies. So what I'm going to do, I'm just going to quickly stop recording and then start again so that I can increase the size of the recording for you guys to see what's actually up there. If I click here, this is a layout on its own, and that's the name of the strategy. Organization is key when it comes to trading. You need to be super, super organized. Just looking at your computer, I can tell if you're going to be a profitable trader or not. You need to be very, very organized, bro. There's no other way. So GUMVRO is a borrowed strategy from Golov University, just called the Golov University Moving Average Strategy. And there's a lot that goes into that strategy, right? So that's why I have a separate layout just for that one. If you want to watch a detailed video that I made, almost about 1 hour explaining this strategy, just check the link above or just go on my channel and just type the GUMVRO strategy, and you're going to see this strategy I even came live on YouTube, recorded a video and passed a profit account within 3 hours. That video is still on my channel, 3 hours video. My goal was to use the same strategy, and I passed the entire profit account, got funded, and even went as far as requesting a payout from that. This payout was actually gotten from that account, which I passed live with you guys, passed phase 2 still with you guys, and even traded fund. I got funded, traded on that funded account, and requested a payout. So the only strategy I was using was GUNVR. And then I also have another layout here, which is known as GUORB. GUORB is simple. What does it mean? It just stands for the Golov University Open Range Breakout Strategy. So the strategy is simple. At the open and at the close of major market sessions, what used to happen is we used to have a lot of activity. It's as easy as that. We used to have a lot of activity at the open and at the close of major market sessions. All right? Open and close of major market sessions. So is that activity that we want to be able to capitalize on it? Because if you can capitalize on that activity, it doesn't matter what direction the market is going to go, you're going to go with the flow. So that one is easy. We'll just come. You can see, for example, this market opened, the Tokyo session opened here, would have gotten our sell stop here, buy stop here, and then this one would have been a break-even trade, and our buy stop would have been triggered, and this one would have made 2% of our account. So that would have been cool 2% even before the London sessions open. The London session would have opened here. You do the same thing, and the strategy is still on this channel. So you can always go back and watch the strategy. So you can see I have different profiles for different strategies. Now on Mondays, most of the time, I used to focus on GU, MV, arrow. I used to focus on my other strategies. And I wait for now the market to get into Tuesday before I start using like the GU or RB, more of my robotic and stuff like I trade a lot at the same time. But on Monday, I just like to focus more on GU, MV, arrow because I want to be able to have an idea of where the market is going. Like for example, if I'm taking gold, I already gave a signal on gold in the morning, and that signal was simple. If I can come here, you can see with GU/MVRO, we just want to confirm something like this, if the market is in an uptrend or a downtrend. And for this one, for gold, we can confirm the market is in an uptrend because you can also see these moving averages sloping upward. So once I already confirm my market direction, I want to always trade in the direction of that trend. I want to always be looking for buy trades, full stop. So here, if I can bring in my fib, the market already created what? Most significant swing low here and most significant swing high right here. So if I can bring my fib from here right up to, oh, that's not a fib. So if I can bring my Fibonacci 2 from here right up from my most significant swing low right up to my most significant swing high, then what am I waiting? I'm just waiting for the market to push back to my 38, 50 or 61% level and then close bullish for me to buy. So even this signal that was given in the morning, I even advise all the traders to use a very small lot size to reduce their exposure because there's still that possibility for the market to push right down here and then close bullish before continue to go up, all right? So you need to be able to trade with a lot of caution because that can actually happen. And if it happens, even though we're going to hit stop loss on this trade, I'm still going to jump in somewhere here and risk again 1%. So I'm going to risk 1% and still, hopefully if I hit take profit, then I've already lost 1% and make 2% of my account. So at the end of the day, I ended the day with plus 1%. That's how you see trading sometimes. Because I'm not going to teach you how not to lose. I'm not going to teach you how not to have losing trades. You're going to have losing trades. Even me, after 10 years of trading, I still have losing trades. But what is giving me money every day is because I understand risk management. I understand money management. Just as Warren Buffett used to say, it's not how much you make when you are right, but how much you lose when you are wrong. So you need to take capital preservation very, very important. So with that in mind, I already know, okay, that's what I'm watching. So what I do is I just do that and I go through almost all the currency pairs on my watch list. You can see this is my watch list. So I just go through all the currency pair. This was a key opportunity or a key signal. I already missed out on this one, so I'm not going to suffer from FOMO, but this is a key signal you would have taken, you would have entered somewhere here. All right, because just looking, I can already see if I can put my fib here and here, the market push even past our 61% level. So we would have just been waiting for the first bullish candle to close. First bullish candle would have been here, so we would have entered there, stop loss just below this candle, and we'll go for a risk to reward of 1:2. That's it. That's a cool signal I'm already giving you guys. That's a signal you can still jump into this trade. If you don't want to be conservative, but you can still jump into this trade, there's a high probability this trade is going to turn out to be a very profitable one. Guys, if you jump in, please watch it out and update me on your result because I'm very positive. We are on an uptrend. That pullback has already occurred right down to our 61% fib level, and then the first candle has closed in our direction. So you can actually jump into this trade as we speak right now and then keep me updated on your results. I do the same thing. I can just go now on Great Britain Pound JPY. The first thing I can confirm here, I always confirm what? My market direction. That's it. Always confirm my market direction first because you can see the fast moving average cross over the slow moving average from above. Once that has already happened, now no matter what happened, I am only looking for sell trades because I can already confirm the market is selling. All right. So my most significant swing high would have been here. Most significant swing low would have been here on Great Britain Pound JPY. So where do I see myself jumping into another trade? If I can bring my fib from there to there, from my most significant swing low to my most significant swing high, I'm waiting for this market to push right up to this level, this one, and this one, and then close as a bearish candle before I can sell. As easy as that. So I still hope for this market to push right up here and then create like maybe a bearish candle, and then I can jump into the trend and continue to ride it right down. And even if it gets here and it doesn't hold and it push right up to my 50% level, I'm still waiting for the first candle to close in the bearish direction, and I'll jump in and I'll ride the trend. I'll just keep looking for that until what? Until maybe now the market has changed from a downtrend to an uptrend, which in that case, the fast moving average is going to cross over the slow moving average from below. Then in that case, I'm only going to be looking for buy trades. Let me use that advantage, this opportunity, to explain something which a question you guys have asked on almost all my videos. All right. Now, if we are using two moving averages to trade, let's just say we have two moving averages. We have the 10 exponential moving average, and then we still have the 23. We have the 23 EMA, exponential moving average. Which one is the fast moving average and which one is the slow moving average? Now, we're not just going to be guessing. We're going to give our answers with reasons, all right, with mathematical reasons, statistical reasons. If most of you guys who did statistics in high school, in secondary school, university, most of that still apply in trading, like mean, median, mode, correlation, and all of that. So in our case, why are we calling, which one is the faster moving average? So the faster moving average here is the 10 exponential moving average. Oh, Golof, why are you saying this? Oh, you're just gambling. How can 10 exponential moving average that the period is instead 10 be the faster one when we have the 23 exponential moving average? No, Johnny, calm down. That's not how you see it, right? That's not how you see it. In statistics or in mathematics sometimes, or in statistics, we don't see it that way. We see it based on how that moving average reacts to price changes. All right. Remember, for a moving average, how do they plot a moving average? If we have a candlestick, if we have a time frame of, let's just say, a 1 hour time frame. So what they'll do is they'll get the market change within that particular hour. They'll put it like a dot. They'll get the market change within the next hour. They put it like a dot. Get it within the next one, they put it like a dot. Get it within the next one, they put it like a dot, dot, dot. And then after, what do? They link those dots. They link those dots, and then if they link those dots and the line is sloping upward, that's a bullish market. Or if they link those dots and the market is sloping downward, that's what? That's a bearish market. It's as easy as that. So in this case, the moving average with the period of 10 tends to react very, very fast to price changes. So that's why it is the fastest moving average, because any small change in price, it will already detect that, okay, we can already see the buyers are already coming in, the sellers are already coming. So it reacts faster to price changes as opposed to the slow moving average, which is the exponential moving average with a period of 23. So if we have two moving averages, maybe one is just, we have one like this and then like this, and then one again just comes from below and then like this, boom. You can see we had this cross somewhere here. So the faster one is instead this one. So this one will be the fast moving average, all right? And this one will be our slow moving average. All right, our slow moving average will be this one, which should be the one with 23 exponential, and our fast will be the moving average with a period of 10. So I just wanted to use this opportunity to explain this, because many people get confused all the times when they come down to a real chart like this one. Let me show you guys. Sorry about that. When they come down to a real chart like this one, where now they can see these two moving averages. We had a cross somewhere here. And just as I explained, you can see the one with a period of 23, which is the blue moving average, actually cross over the red moving average, which is the one with a period of 23. So the red one is the moving average with a period of 23 from below. So once that has already occurred, now you've confirmed an uptrend. And when the fast moving average again, which is the moving average with a period of 23, this one with a period of 10, crosses over the red one, which is the moving average with a period of 23 from above. Remember, crossing from below and crossing from above. So if you cross from above, where you have something like this, and then it cross from above like this, now where this one is the fast and the slow, this is confirming a bearish market, confirming that the trend has changed. So we confirm the change in our trend right here, and that is just the quickest and the simple way to explain it. So that's how I plan particularly for the strategy. And if I can go to GORB, like I said, Monday, sometimes the market is still very erratic. The market is still very, very volatile. So what I do sometimes is I just wait for the trend to move into Tuesday. And then by Tuesday, I've also gotten a lot of trades with GUMVRO, with my other strategies. We also have almost about 6 different strategies in Golov University. So I'm not going to be going through all those strategies. If you want to learn those strategies A to Z, if you want me to mentor you one-on-one, then check out the link on the video description to enroll in Golov University, because that's where you're going to learn. That's where I'm going to mentor you. If you want me to be a mentee or your mentor, if you want me to be a mentor, then that's where I'm going to mentor you A to Z. So that's how I particularly plan for my new week. Then another thing I'll still do is I'll also say to myself, like, okay, am I going to be focusing more on pro firms this week, or I'm going to be focusing more on my private account? So the decision will come based on what I have on my personal portfolio and also what I have on my pro firm portfolio. So if I have most accounts on my pro firm portfolio, which are already at the funded stage, then for that week, I'll concentrate maybe about 60% of the time on my funded accounts, because bro, I want to make money from those funded accounts and then put in my private account. But if I have more accounts that are still in the challenge phases, like maybe phase 1 and phase 2, then it's going to be 50-50. I'm going to be spending 50% of my time on my private account and then 50% of my time on those pro firm accounts still on challenge phases, because obviously they all have minimum trading days, meaning I'll only be able to get funded the next week. So that week, I'm just using part in my funded account, in my funded challenges or my challenges, which I see in the challenge phases, and part of my time on my private account. The goal for you to trade with pro firms should be to raise capital for your private account. So that's how a Forex millionaire with 10 years of experience plan for his new trading week. And like I said, there's nothing that happens in Forex trading as an accident. Proper preparation prevents poor performance. So if you don't plan, trust me, you're not going to have any results when it comes to Forex trading. So as always, check out the link below to enroll in Golov University if you want me to mentor you one-on-one. I hope you must have heard about Perps Pro, which is the most viral and the most profitable Forex robot as we speak. You can still use it on your private account or your pro firm account. So always check the link below to be able to get Perps Pro. And talking about a pro firm account, check the link to also use Perps Pro, or to also trade with Lionheart Funding Program, which is currently one of the most fastest growing pro firms out there. You can trade up to $600,000 in fund, and your payout is processed within 24 hours. Join my free Telegram community. I see most of you guys watching my videos are not in my free Telegram community. So make sure you're in my free Telegram community so that you never miss any update that comes from me. I put some videos at the end of the screen which are very, very important, and they are related to what we've been talking about. So check out those videos, and I'll see you guys on these videos. Peace.